good morning. So this video will be breakdown of few pairs I have selected based on the community request from the community members. And so first of all, we'll be going for Euro JPY. So just for the sake of what higher time frame is showing us, if we see the monthly time frame, we know price had been way too bearish, but what happened here, price failed to make a new low, mitigated the extreme and started moving higher. But before that, why this did not fail? Look at this previous high broke above this, so we had a change in structure here only. Then price took approximately 4 hours to give this pullback and then started this next move higher to again break this higher. So this was the base for this pair if we want to see what the higher time frame direction would be. So monthly we are bullish, way too bullish, right? Jumping onto the daily now, not weekly, because daily will show much clearer price action. So I've already marked this for you. Talking about this, we see after every break of structure or change in structure, what we expect for the price to continue higher, we want inducement. So every time what happens on the left also, here you see price made some inducement every time to be taken, failing to make a new high, going down again to grab some sell side liquidity and then going higher. Same thing happened again. Price build up this liquidity, comes and grabs it and go away. As I've told multiple times in the past, that inducement is what moves the market, not the POI, not the order block, right? So see here, this is a fine example. Price just took the inducement, there is no order block, nothing here, and price moves away, right? So we have to look on the smaller time frame what price is doing. That's why I always say focus on the lower time frames, it will tell you complete story. So again, after new high, inducement is created, internal structure in mitigation of the extreme, price goes higher again, breaks the structure again, same thing again, mitigation, inducement, continuation until it breaks the high again. And whatever happens between the swing high and swing low is all internal structure. Price can do as complex thing as it can in that range. What I mean by that, look at this was the swing low, this was the swing high, price did this complex pullback to come to the extreme zone, then again it should have gone higher, right? But again price manipulated here, did some more complex structures before actually expanding to break the structure. Moving ahead again, small inducement, price moves higher, again same thing, price moves higher, builds up this inducement, comes down aggressively, takes them out. Because mostly traders will think here this is the break of structure or the change in structure, let's sell here. Price will give you the small reaction and takes the stop losses. So you have to see the structure correctly. And talking about the recent price action, same thing happened here. What happened on higher time frame, price made this new high which was adjacent to the monthly time frame break of structure. It was somewhere here, I think. So it swept first, then came down to the first demand zone, mitigated it, goes higher, closes above it. After a new high was made on monthly, it was evident that we will see some sort of correction in any point in time. What happens? An aggressive push down, all these trend line traders, retail traders were taken out here, because retail traders would try to buy here, buy here, buy here, buy here, buy here. Everyone was taken out here. And after that, what price is doing now, all this we'll see on smaller time frame now, right? Let me clear this out completely so we don't have any mess on the chart when we go to the lower time frame. So let's go on 1 hour and see. So let's talk about the recent structure, because that's what more important for us. So when initially price dropped heavily, mitigated this demand, the extreme demand of the main push, we had this complex structure going higher, moving higher. Then again we had some sort of structure shift around here, price failed again to make a new high, came again down. After that we have been coming down till this extreme zone in this push. So when we see price failed to make a new low here, and we saw a structure shift here after this sweep of liquidity, we saw a shift in structure, and after that you see price has been bullish. What price has been doing is creating liquidity, trend line, inducing them and moving away. Same thing has been happening in the current structure as well. In the current time, if we look to see a trading opportunity, if you see this last high just got swept, we didn't have any break here. So what is the next scenario or best high probability thing that can play out is price is most probably making an complex structure to create liquidity, to induce more people before creating or moving in the high probability direction, which is bullish. So what I see is price has been creating this trend line liquidity here, or the relative equal lows, which is now kind of taken. So from here, two things can happen. Either we'll see price coming all the way lower to this demand, then continuing higher, or as I said, order block is not that important, inducement is important. So as we have seen, this inducement has been already taken. So on the lower time frame, 15 minutes, 5 minutes, or maybe 1 minute, if we see any sort of structure shift, we can look for buying opportunities, right? So this is how you should look at the charts and try to build up a story that what is actually going on in the market. Going on to the lower time frame now, 15. So see, this was a trade I took recently on this pair. If I mark out, this can be a little longer video, so I want you to stick it to the end because I'll be breaking down more pairs as well. So here we see, again after this last sweep, price didn't make a high, came down, again goes higher, again sweeps it, means there is more liquidity on the sell side. That's why price is failing to make a new high, right? So when I took the trade, what happened was price again respected this, right? So this was the recent demand which price failed and came down aggressively, and this was the area I was interested in. That I'll show you on 1 minute why I took this trade. So price has been bearish here, you see, right? Internally what has been happening, 5 minute will be much more clear, right? So here if you see, from here price came down, this is all a single structure, right? We had this inducement here, but price failed to induce it, just came all the way to make a equal high and came down again to break structure. Now what people think is this is a break of structure, and we mostly will see a reaction from this or order block, but this isn't order block first of all, and we have resting liquidity here. So the high probability was price to take all this, and then on lower time frame we look for some entry to go lower again to break the structure. So that was the idea here which I followed, and there it is. After that same thing happened. See on 15 or 30, see this, what happened here. After the price made this new low, what we need inducement, which is this high. After that still price respected the low, didn't break it, mitigated here, again move higher, all complex pullback, created all this trend line liquidity. Trend line traders are buying here, buying here, buying here, right? Eventually when price went to a certain level, where it went, maybe it was targeting a liquidity or it was focusing to go towards a POI, right? In this case I don't see a POI here, so I'll assume these highs were acting as liquidity here which got taken, and then we had this push down again, and still price has not closed here. We had a sweep only and we are bullish. But what can happen, we have taken the inducement on 1 hour. As I said, this all has been taken. So but in this structure we are still bearish, so we can still assume price is bearish on intraday time frame, but higher time frame is bullish. So if price comes lower in this demand, we can expect a higher prices from this area. But if price chooses to go higher from the same level we are in right now, we need to see 5 minute structure at least to turn bullish, or 15 minute will turn bullish after break of this particular high. If we see price breaking above high, this high, then on a pullback we can expect a push higher again, and the trend can continue towards the high time frame direction, right? So I think that's all for Euro JPY. I have explained enough on this. So if you have any doubts after watching this video, just text me on Telegram what is your query, and I'll do my best to answer your questions and solve them, let's go on Euro USD now. So I've taken a different chart than I use. Again, let's start from monthly only. So don't worry about looking at the higher time frames as well, because the market is fractal. Whatever price action liquidity you see on higher time frame is same on lower time frames as well. Whether it is 1 minute, 5 minute, 15 minute, 1 hour, 4 hour, daily, monthly, everything is same. It's just the volume of candle is different. The duration of candle is different, right? So here what we have, let me. So we had this breakout structure on GBP USD, and after that what we expect, price to go higher to collect some liquidity, which we call inducement, to then continue lower, right? In this case, I think the liquidity has not yet been collected, which is around here. So we still expect price to collect this liquidity before coming down. That's what I am expecting. I can be wrong as well, because market will move as per their requirement, not my requirements or my methodology, right? So that's what I'm expecting, price to continue a little bit more higher here before it continues down. And if we zoom into the current price action also, price is currently in this last order block, or the last, we see the rally based rally. So from here in this zone, we can still expect, we have 14-15 more days left for this month, we can still expect monthly to turn around, right? It is still not bearish market, we are still in bullish market. But intraday, yes, of course, we are in bearish market. Going on to the lower time frames again. So here again, if we see what happened, price tried going higher again here, took small liquidity, came down. This was the inducement in this leg, and this is most probably our demand. So we can expect, if we see any structure shift from this zone, a bullish push again higher to ideally move above this, because on monthly we have some higher targets still pending. But until and unless we don't see a closure below this low, I'm still not bearish, because this was the low which is responsible for making this high, right? Because anything in between these pullbacks, you see, there is no inducement taken. It was, I can consider this whole as a single leg, and now I want price to come down into the discounts before it goes higher. So this is on weekly. Jump on the daily, what we have, same thing. You can mark out this demand and wait for the price to turn bullish, because I don't see anything relevant here. The price should come below this to mitigate before going higher, right? So this is one of the important zones I want you to focus on. What's happening here again on daily? If we see, let's forget about what happened after this area, forget about this, what happened before it. Let's focus on that first to build a story what price was thinking, right? This wasn't a supply zone which you should have like focused on very much, but yeah, if we see, this was the, and this is where the story little bit changes for me on daily time frame, because monthly is extremely bullish for me and weekly as well, but on daily what we have is little bit contradictory for me on Euro USD. So what I've said till now is like focus on this area, right? So after this high was made, this was the last pullback, you say last inducement which would have been taken before the continuation, and this was the last extreme order block of this particular leg. But what happened, this got failed. So on as per daily structure, I think this is the change in structure, and after changing structure, whatever happening here, this whole is just a complex pullback to reach the extreme supply here to continue down again to make lows. So daily is telling me this story, which is contradictory for me, but I'm not focusing on that too much, because I want to, because I'm a intraday trader. We don't just buy or sell and hold for months or years, right? So okay, we have some contradictions, we'll focus on them. So for the daily time frame, it should have come down taking all these lows, but on higher time frame we know the price can move higher, so we'll focus on that as well. So price will tell everything. You don't have to buy a bias. If that no, I am a buyer, I will be buying only, whether the market is bearish or not. So you don't have to buy the bias, just focus on the price action, what the price is trying to do. Jumping onto the lower time frames now. Wait, did I miss something? Yeah. So what that so it's as per daily thinking, as this is our supply, price mitigated it, came down. What do we expect here now? Same thing again, inducement and then continuation. It mitigates something or not, we don't care about that much. So it induces this low, mitigates this, continues higher, sweeps it, failed to close higher, and boom, right? We had a reaction. And as per high time frame, this was made our inducement, which is already taken. Price has come down to take orders from this particular area, and we can expect, or we'll monitor this area, how this performs, how price action plays out here. If we see after this it is about to get mitigated, so after mitigation, if we see some sort of corrective structure, right, some sort of this corrective structure, this is a very extended corrective structure, but if we see some corrective structure here on either on daily or on a lower time frame, we can expect price to again push down, right? But if we see clear structure shifts here, price is efficiently moving higher without leaving any mitigation areas, leaving any liquidity behind, then we can expect price is ready to go higher, right? So, and on 4 hour, what do we have? Let me remove these. You see price is still bearish, nothing to worry about. 15 minute will be much more clear here. If I talk about this price action which is in front of the screen, what happened? I've shared this on a channel as well, the EU and GU charts price action on the lower time frames. So this was the CPI data or something, I don't know, 10th of October. So this was FOMC or CPI data, which when we had this crazy push up and push down in the price. So but what is more important is price market gave us a swing high and a swing low, right? And we are in a bearish market. So what price did is price came down, broke below it, then we can expect, yes, the bearish market is still intact, there is no need to buy. Price came higher the next day, mitigated the extreme, again shifted to the bearish, gave us a pullback, selling area, again push down, break of structure, correction, inducement, again came down. It will repeat again and again. Inducement is important. If you can't identify the right inducement, you will fail to identify the POI. That is the reason most of the traders know basic things but still fail, because their inducement is wrong, their POI is wrong, and these both are wrong because maybe their structure marking is wrong. They are incorrectly marking their structures, right? So these are the reasons you have to be good at basics, because analyzing a market is different aspect, and trading on that analysis is a total different scenario. You require a proper strong psychology to be able to trade in a forex market or in any market, whether it's forex, stocks, futures, whatever, right? So this thing will continue again. We made a low, inducement comes down, sweeps it, goes higher to take the opposing liquidity, again comes down, build up of liquidity, taken, come down, break of structure. Again we are building some sort of liquidity, it might take it, induce all this, then from above the inducement only or from the extreme we might see again a push. So there are multiple things price can do, this is one of the things. So right, so that's all for Euro USD. I think I haven't missed anything. So the video is already 25 minutes long, so I'll be hurrying because people won't see that long video. Let me delete this. What we have on monthly on this. So as you know, GBP USD and Euro USD are highly correlated pairs, but what happening here is, as I told you, on Euro USD we still have an inducement to be taken on monthly time frame before it goes bearish again, right? But daily is already telling me that we are bearish, we don't need inducement. On GBP USD we already have taken the inducement, and recently we have mitigated this POI area and we are going down. So there is a higher probability Euro USD might not take the inducement and continues down and follow the daily bias, daily time frame bias, which I told you, which is contradictory with the monthly time frame. So price is coming down, so that's all, and we expect price to continue down to at least take all these three lows, if not a new lower low, because on a higher time frame, I think if I'm not wrong, price has swept its old low. So sweeping an old low means price can now actually reverse, right? What the chart is saying. So price can come down, take the liquidity, and then continue higher to make a new high. But this will take months and years to print on charts. So let's not speculate what might happen in a year or two or five. Let's go on lower time frames and see what do we have. So we need daily time frame to be able to trade. That's all we need, nothing else. So in the recent structure, what we see, price has been extremely bullish. What it has been doing, after taking all this lows, inducing them, mitigating here, price started bullish move to the upper side. I'll look at this on smaller time frame to explain the structure more correctly, but yeah, let's go there only first. So where it got mitigated was this last down candle, right? We got a small mitigation, and after mitigation, what did we get? We get this closure, which was a change in structure. Price again did this complex structure. Every time it makes higher to go at a certain level and then come down, induces all the lows, then continues higher again. And at these time, your actual knowledge will play a big role, because at these times when price consolidates in a big area, your actual knowledge of reading the price will save your capital, because most of the people lose money when the market is consolidating or accumulating or say distributing in the market, right? Because when the market is in a consolidated area, it it always takes out buyers and sellers every time. Why I'm saying that, look at this, price makes it higher and this low, then we saw a push higher, break of structure. What people will do, they will mark this as order block, try to buy, goes higher. So till here it's all looking good, right? Now here again, people will think, yeah, this is an order block, we have everything, we have inducement and everything. They will try to buy, price will sweep it out, take their stop losses, goes higher again. Now what will happen here, breakout traders, buy stop traders will got triggered. What price will do, dump. Now people will think we are in a bearish market, let's sell to the lows again. What price will do, price won't even give them a proper pullback to enter, because most of the dumb smart money traders will expect price to come to the extreme before it sell offs. What happens, small critical structure comes down. Now when this happens, people will try to get in here as soon as possible because of FOMO, because they'll think price is not going higher to our extreme zones, it will come down now. They will get in here, price will give them their reaction of 40-50 pips, 70 pips, and boom, reverses on them. Okay, they might lose here. Then what will we think, okay, this all was inducement, we will try to sell here. Now look at the market here, how market traps them exactly on this extreme. Price gave those dumb money traders their reaction. Okay, we have a structure shift again here, we can sell again. Price comes here, aggressively takes them out, and they're dumbfounded what we should do next. So that's why your price can be bearish or bullish on different time frames, but you have to figure out that which is the main push in the market and which is the complex structure in the market. Because the main, after every main push, we will have a complex structure playing out to take the inducement, and we have a lot of different ways from after making a main push, price can play out to take the inducement and then continue higher. And in the same case, you can see, as I've said earlier, right now, after taking the inducement, there is no need for the mitigation of any order block. Order block was below here, price just got reversed here from middle of nowhere just after taking the inducement. So inducement is what moves the market, not your order block. And I have been saying this from last 4 years, I think, on my same group, and still people are not following that thing. So moving ahead, again a new high was formed. What happens, price comes down, takes out the inducement, This was decisional, which got failed. Price came on this extreme, mitigates it, and again bullish, makes a new high. So same thing will happen again and again and again and again. You just have to look at daily and 4 hour. These two time frames will tell you the bias. The lower time frames, 15, 5, 1, are the time frames to trade intraday sessions. The daily, when you wake up, come in front of the charts, 15, 5 and 1 minute time frame will tell you what today I have to do, right? So again, what's happening here? If we see on daily here, on the current price now, this low can act as inducement in this case, and price has taken that inducement. So on lower time frame, we'll see if we have some zones from where price might reverse or price will continue down in this zone. We'll go step by step. We'll not speculate that we are going bearish for next 1 year. Step by step. We are intraday traders, we are not swing traders, right? So what I see here is this is one of the zones price can be interested in on daily time frame. As per weekly, this is inducement, but as per daily time frame, this was inducement and this was the extreme, which is getting broken now. So there is high probability price can give here a small correction before it comes down in this zone. This will be my next step to think that I want a bearish push. Maybe after a correction or whatever the smaller time frame is doing, we'll see. Let's delete all this again. Okay. All complex structure here, nothing to talk about. We'll focus on 15-minute structure, which is much more important. And let's analyze it from this area. What happened here? Price goes higher. We are already bearish. We had this bearish push. Price induces, goes higher, mitigates something here, comes back aggressively, and this was a news day, I think. Breaks, another correction, comes down, another corrective. All complex structure. This is all complex structure, and I prefer not to trade in this complex structure when it is too messy, because you see sometimes price is not even taking the inducement on 15-minute, might be on 1 minute, and it's moving away quickly. All corrective structure. And recently what happened here, before this huge drop we saw yesterday, price took all this inducement, this high, this high, this high, this high, this high, everything was taken first before this dump. But for some traders, what it would be, a change in structure, let's buy here, but eventually stop losses get hit. These are the times I would like to stay away from the market, because these complex structures can get very messy. And I personally, when I don't find any market conditions to my understanding that what's happening in this market, then I try to leave that alone for sometimes, to like for a week or two, and after that maybe price will give me a clear price action and I'll be able to read it and able to trade it. It's not you just have to read the market and sit back in front of the charts. No, you have to read it and try to find out potential entries so that you can capitalize on them, right? So that's all for GU. I think nothing important, and I still think price will continue down. There can be a corrective structure before it pushes. So yeah, that's it. Going on gold now, the most interesting pair. Not going on high time frame because it's all bullish, but I can talk about weekly, because recently when we got a pause here in the price came in this fair value gap and we saw a reaction here. So there is high probability we can go above all-time high and make a new all-time high, and price is still trying to do that. We are having some traps being formed at the last border of all-time high. Daily, same thing as weekly. We had this run of liquidity below this daily candle into the fair value gap and continuation. 4 hour shows nothing important. Yeah, 1 hour is important now here, because this is the area where my first buy was placed. So what happened here, if you see, and we know this is the 4 hour daily fair value gap, which is important. And after the market opens this week, we saw price come down into this fair value gap, and with this fair value gap efficiency was done here. This was the last push. After this, we had this complex pullback coming down to take this inducement to equal relative equal lows, mitigation of the fair value gap, maybe something here on lower time frames. I don't care about that. Inducement is important for me. Then what we have, a push higher, change in structure again here, comes down in this fair value gap, which I shared on Telegram channel as well with the community, that I'll be long from this area. And since then, you see price has been bullish towards the all-time high. But now talk about the recent price action. What next? So after making this, okay, price didn't take the all-time high and it flushed down. Where it came down, talk about that. Let's zoom in. Who are in the community from long time, they know what is inducement. I have taken multiple live sessions to explain inducement, market structure completely. I focus on these basics more than any advanced things, because that is the thing that will sustain you in the market and will help you not to blow your account every single time. So inducement, mitigation here, and try to continue higher, but failed again. When market fails, it will try to grab the opposing liquidity first before it continues again higher, opposing liquidity or the opposing demand or supply, whatever the market conditions are. So here what I can see on early time frame is market, after mitigating here, tried to go higher, failed again, comes down, the first demand comes here, it tries to grab it, again goes high, but we think still failing it. What this will do is, this will create this whole thing as liquidity, or we say a liquidity pool where a lot of orders are there, people will be buying from this area. So if price comes down, taking all these low from this extreme, I think price will give us another push higher, right? But if price fails this low on any pullback, I'll be very interested in taking a sell to this inefficiency before market again continues higher. So after feeling of this, let me change the color to blue. After feeling of this low, there are two areas you should focus on. First, this efficiency. Second, the extreme demand which actually pushed to make this high, right? So this efficiency and this here are the two areas you should focus on after feeling of this low to buy again. Otherwise you can be a seller for a short period of time after feeling of this low. So yeah, this is how the whole scenario I can see gold is trying to do here. And I think in London session or Asian session, price will show us some bullish sentiment, but if it does, I'll stay away. And yeah, that is one more scenario, right? So if in London session Asian is about to get ended, so in London session, if we see a push higher above all-time high and creates a new all-time high, I'll be hunting for some good selling opportunities in the New York session. I said opportunities, I didn't say I'll sell in New York session, because after taking a external liquidity, in this case which is the all-time high, there is high probability price can enter into a corrective or a retracement phase, right? So these are the few scenarios I shared you on gold which can happen, so focus on them. And this was the video on request from the few community members, and that's all for the video. But I would like to say that if you have any questions, do reach me out. I'm happy to help anyone, and it doesn't cost you to ask questions, right? I'm not asking you for money. I want everyone to be profitable, to trade profitably in the market, because I know many people are losing from more than 4-5 years, still trying to find an edge. The edge is you have to learn properly. If you can't learn, you can't make money. Money comes with knowledge, right? So thank you. If you're still sticking till the end, have a great one.